Hello and welcome to this video. Today we'll be doing a stock analysis on Mastercard Incorporated. Now if you don't know Mastercard, they make credit cards and debit cards of course. Now firstly we're going to be doing a technical analysis using SMA lines and RSI. Now firstly let's take a look at the SMA lines. Alright, now firstly we can see here there is a golden cross here on the 24th of January, which is 2 weeks ago almost. This is very nice, and even before the earnings, that is what this E is for. Now, for those of you who don't know what a golden cross is, it is a movement that appears when the stock has a lot of upwards momentum. As you can see, the yellow line here, that is the 200-day moving average, and the green one is the 50-day moving average. Now, once the 50-day moves above the 200-day, that means there is a lot of current upwards momentum. As you can see here, right here, it is upwards, the 51 here. Now, even the 10-day is above the 50-day. That doesn't matter as much, but it is a nice thing to confirm that the upwards momentum is very high at the moment. Now, if we look at it in a long term, let's go all the way back to September of 2023. We can see that it was trading at 300 and what is this? $390, and now it's all the way up in 564. This is almost $200 up in a year and a half. That is very nice. What is that in percentages? That is like 71% or something like that. That is very, very nice, because they have very solid cash holdings, because of course everybody has to have a credit card or debit card. So Mastercard is a very good company. There's this and Visa, who stand for 99% of all the cards in the world. If you want to know more about Visa, check out my other video. Now let's look at the RSI down here. Now the RSI in this one is actually quite volatile. I'm actually quite surprised by this, because on the Visa one it was very, very stable, always in the top. Here it's up and down. Close that ad. Up and down all the time. Now for those of you who don't know, once it's below 30, that means it's oversold, and once it's above 70, it means it's overbought, or that is at least what it's used for. Which means once it's down here, that means there's a moment where people think too many are selling at the same time, and it will often rebound. As you can see, it always spikes on the top and the bottom here. I'm actually going to show you compared to Visa, just a minute. Right here, as you can see, Visa, it is much better. It is much more here in the top. Of course, they also have the spikes down here, but it doesn't spike nearly as much as the Mastercard does itself. So that is something to be wary of course, as Visa and Mastercard are the two biggest competitors in the world now. But now, if we look at it, it actually has a very nice technical analysis. We can see that it is often in an upwards trend, very often slowly bouncing up. Of course, there are going to be some death crosses here, or it has some downturns, but that is of course to be expected. It can't go up all the time. So very nice technicals. Now let's look at some of their Q4 earnings. All right, now if we look at their net 4 earnings, we can see that their net revenue is $7.4 billion. That is compared to 6.5, sorry, $7.5 billion compared to 6.5 the year before that. This is quite impressive, as they typically don't earn that much more, because of course they can't release a new product that gives them a ton of money like Nvidia or something like that, because they simply make money once people pay with their cards. But now we can also see down here their operating margin is up quite a bit. That has to be because they increased some of their fees, but as you can see, they increased them quite a lot. This is quite positive. That is also probably why this stock increased so much. As you can see, if we make this again down here from middle of 2023, as you can see, it's, if we draw a line, it's a very nice, let's just make it easier to see. It's a very nice line. Yeah, so that is quite good for the company to have a stable trending. Of course, there are going to be some pitfalls like this. Overall, that's very nice. But as you can see down here, effective income tax rate is even down. That means they're going to be paying less tax. That is quite good. So yeah, overall, pretty good. And also here, their earnings per share is very nice. It's up almost 70 cents. Now, earnings per share, that is how much money they made per share they have. So if they had 10 million shares and divided that by their amount of stocks, that is how much money they would earn. Now, this is very nice. A lot of stocks don't make above $3 per share, so that is actually quite impressive. So I would say at the moment, I personally wouldn't buy it, but that's because I prefer Visa over it. Now, I'm not going to recommend you to sell it or buy it, but I would say keep this on your radar because it also has quite nice dividends. Because as you know, Mastercard, everybody has to have a card, so it's going to be giving quite nice dividends as they give about 1%. Again, it's not that much, but it's just a nice stable so in the bottom of your portfolio. Because as you can see here, if we go back, it always trades within this pattern. So if we go back all the way to 2022, it's at 360. Of course, there are gonna be times when it's below that, like here when it's down to 90. But as you can see, generally it has a upwards. I can even find it here in Yahoo Finance really quick. Let's see in here, Mastercard. You can see a much larger graph. 5 years here, as you can see. Again, it's not gonna explode up high, but it's just gonna slowly take along and it be a nice space for your portfolio. And again, right, only 0.5% dividend. It's not that much, but it's better than nothing. So if you have a quite highly volatile portfolio, this is a great stock to have in the back seat, just to make sure that if everything tanks, you have Mastercard, because there can be a huge drop in everything in the planet, but people still need to buy their food and stuff or pay their bills. And that's how Mastercard makes money. It's not how much, it's not a percentage. So they make the same amount of money if you pay $1,000 or $1,000,000 with your card. They take a certain fee every time. So let's say for one company it would be 0.007 cents. For another distributor it might be 0.009. So that is how they make money. So it's always going to be roughly the same. But as more people get cards, people in Africa and people in other places where it's not as technologically advanced, as that increase, this is gonna increase. Also, once people start to buy more and more without cash, again the revenue is gonna increase. So I would say keep this on your bench just to look out for and maybe purchase if you think it. So yeah, but again, this is not a recommendation. Always do your own homework. But yeah, I can see maybe this going to 710 perhaps at top, maybe 600 within 2026. So within 2026, I think it's gonna go up to 710. But again, it's not gonna increase a shit ton. But yeah, that is my analysis of this stock. Thanks for watching. Don't forget to like and subscribe if you enjoyed this video. If there are any other stocks you want me to make analysis of, please leave it in the comment section below.